Welcome to another episode of the Dealmaker Series. Today, I'm joined by Senior Vice President of Bulkley Capital, Mr. Oliver Cohn. Welcome back to the series. Thank you for being on.
Thank you very much. I guess you didn't listen to the first one, so you let me come back. So I appreciate that.
No, first one was great. It was a long time ago. It was last year. But for those that may not have seen it, tell us a little bit about yourself and tell us about the company.
Yeah, thanks. Oliver Cohn, as you mentioned, Senior Vice President of Bulkley Capital. So Bulkley, we're a boutique M&A advisory firm, investment bank, sell-side broker, whichever bucket you want to put us in. But basically what we do is we work with founders, founder-owned businesses, low end of the middle market, so 3 million of EBITDA and up, and help them prepare for and execute through a process to find the best outcome from a ownership succession standpoint, or whatever that means for them in terms of what they're looking for on the other side. We try to find the right buyers, the right investors that fit that strategy and make it a competitive process, but at the same time, make it selective and keep it very confidential and targeted and make sure, like I say, that we're thinking about the end goal for each of these clients.
Excellent. And we are now in Q3 freshly in 2026. So I think it's been almost a full year since our last episode.
Okay.
So. Yeah. So tell us, what is it looking like in the deal flow for you guys? Increasing, decreasing? What are you seeing?
I think, same old story from the last few years. At the beginning of the year, everyone was very excited and positive about, huge influx of opportunities and deals, which hasn't quite panned out. I'd say deal flow, kind of pipeline increasing, but increasing slowly and tentatively.
Okay.
I feel like owners are hesitant and cautious, but at the same time, there's some positive signs. I feel like, there's much more knowledge among the owner community than maybe 10, 15 years ago about what's going on, how buyers are thinking about their business. So I'm running into more owners who are earlier on in the decision cycle, which I think is a positive for that world, right? Instead of rushing through, we always say selling your business is a process, not an event. You can't just wake up and have it happen one day. I think there's been a lot of reactive buyers over the years that get approached by someone or something forces their hand that it's time to sell. And obviously, as we'll probably talk about, that's not the best way to maximize value or optimize the outcome. And I'm finding I'm meeting more and more owners who acknowledge that and are willing to spend a year, 2 years, 3 years actually positioning for a successful exit, which, as I said, I think is positive for that community of people.
I saw just the other day that the Dallas Federal Reserve had put out one of their surveys around banking, and it noted a pretty marked increase in loan demand as well as loan volume across C&I lending as well as commercial real estate. And I'm just thinking, there was also another survey they had released the same day, actually, around the services sector that also showed a pretty strong increase in business activity. And they noted that the outlook from leaders is for the next 6 months is pretty strongly positive. I'm curious, are you seeing any of that reflect in deal flow here in the last quarter or so?
Yeah, I'd say, it's kind of like, I feel like what's happening in the market right now is fairly bifurcated. There's some very strong industries that are attracting a lot of investment interest, right? And are doing well relative to the whole. And those deals, those owners, those industries where there's a big spotlight and a lot of investor interest, are doing very well, like from a transaction standpoint. A lot of competition, multiples getting bid up, a lot of money chasing those deals. The banks, as you're mentioning, supporting those transactions and supporting those companies. So it is a little bit of a, haves and have-nots. I feel like there's a handful of industries, whether those are residential services or technician-based services, those kinds of things that have, they're not going to be necessarily impacted by supply chain disruptions or tariffs, or maybe even by AI, and a lot of money pouring that way and a lot of businesses benefiting from that. So yeah, I'm seeing, there's certain sectors of the market where there's a lot of money flowing that direction. And I think that's buoying up, the overall market, and you're just not seeing the other stuff that's, people are a little trapped in and not able to sell.
Yeah. And I feel like that'll kind of neatly move into the next question, which is around structures. Are you seeing any differences in structures now in Q3 or in coming out of Q2 this year?
I don't think so. I think most of our transactions, the structure is some form of majority sale or recap, where this is really driven by a business owner who's trying to solve for personal risk and reduce that personal risk, diversify their net worth. Everyone talks about the business owner who has 90% of their personal net worth tied up in one, thinly traded, privately held, non-marketable security, right? There becomes a point in life where it's sensible to diversify that, take that risk off the table. But most of our clients are not ready to, do nothing or to sell 100% and walk away. There's still unfinished business in terms of growth opportunities, entering the next level of management, achieving the things that they wanted to achieve for their legacy. And so we do a lot of deals where owners are selling maybe 90% of their ownership, leaving 10, 15, 20% in the business with a new owner and a new partner, and executing on the growth strategy that they and their management teams want to do. And honestly, they've just at the point where their risk tolerance is not going to support that. But if they've put money in the bank and someone else is going to come and support them, then they'll take that risk, right? And we can double the business over the next several years, maybe, or do all the things, take some big steps that were kind of outside of the kind of focus up until now.
Yeah. Interesting dynamics there. So you mentioned a couple different sectors. Are you seeing any sectors in particular that are particularly interesting?
Yeah, I mentioned kind of blue collar services, which have been a big thing for the last several years. A lot of private equity money moving into that space. So, whether that traditionally kind of the HVAC world, now HVAC is a big deal in the data center space, right? Keeping all those computers cool. So that doubles down on that. Any kind of facility services where you've got an opportunity for recurring revenue. We used to always say, SaaS businesses were this perfect business because of recurring revenue. And now SaaS is a little bit of a, people don't want to touch that space necessarily or are very much more cautious about it. But a lot of these services businesses, if you can sign a building owner up for recurring maintenance or inspection plan, that's a nice economic model to be looking at as an investor. People talk about, what is AI resistant, where are some sectors where you are not going to see that. And then the interesting thing the last few years is so much in the professional services space, which I know you've seen and we've talked about, whether it's accounting, RIAs, wealth management, even legal now.
I was going to ask,
people businesses.
Have you seen a lot of buyers looking for accounting firms? Are you seeing that, or is it just still kind of in the ether as a rumor?
I mean, I've seen a lot of strategic, accounting firms looking to expand that way, right? And get into new markets where here we are in Dallas. And, if you're not already in Texas, you view this as a growing market. We should have an office there. And then it's a matter of, do we come in through acquiring someone or trying to set it up ourselves? But as you hear about more and more consulting and accounting firms having private equity ownership, I think that's only accelerated, right? And the ability to do transactions in that space on more of a traditional, private equity model with a hefty chunk of cash up front versus all being kind of earn out or partner buy-in, which I think traditionally was the model in those spaces, is kind of accelerating that. You're seeing a lot more of that.
Interesting. I'm curious to see how that'll unfold in the next 12 months or so. So let's focus on the economic forces. What are you seeing impacting deals now? Is it still all about tariffs and interest rates, or is there something else emerging?
I think economic wise, everyone's going to mention kind of the AI economy and the dynamics there around energy spending and, what's going to happen to your costs there. I think, a lot of consideration on the front end for investors of consumer spending or commercial, business spending. So this whole what's discretionary, what's not discretionary. So non-discretionary spending is always better if you're if you're the recipient of that. I think just economic headwinds potentially, when is the shoe going to drop? When are we've been talking about kind of a downturn in the economy or now potentially increased interest rates, right? How do we guard against that? How do we think about how is that going to affect spending? And I think people are cautious and a little bit more thoughtful about anything that they think may be discretionary or maybe the first thing that gets cut. your world, we talk about, is marketing spending, is it the first thing that we try to reduce, which may be, hurting yourself in the long term, right? But it kind of sometimes has a big kind of target around it.
Yeah. Yep. Yes, it does. Always a little
Yeah,
ironic.
it's like, where are you spending those dollars? I mean, that's another industry that I've seen a lot of deals this last 18 months in the kind of the live events and the experiential marketing space, right? Are we spending more dollars? It kind of seems to be like a reaction against, AI marketing or digital marketing or kind of online events to get back more in person. The deals really happen when people can get in front of each other in person. So we should be spending more money there. And you're certainly seeing it, right? Lots of brand activations and pop-up events and all that kind of stuff.
I think we're back to the normal cadence of events now, finally. I don't think there's a lot of dollars being directed toward the marketing departments. In fact, coming into this year, all the publications I read, and I actually feel it, even on my level, were that budgets were reduced quite a bit, and we're being reallocated away from marketing entirely. And some of it was, some of it went toward AI initiatives, but not really as much as people might think.
Yeah.
I think
Yeah.
I think there was a pretty pronounced shift across the globe when it comes to marketing teams, and partially because AI came into the picture so hard, but that was not the only challenge that drove that, I don't think. But
yeah,
interesting insights there that you're seeing as well. So last question, we're looking to the crystal ball again. What do you see coming next for the investment and M&A community here at DFW or Texas?
Yeah, I think, it's interesting. Continued maturity of the M&A space, right, is getting more efficient. By that, I mean, when you're representing a seller, there's more capital out there. There's more types of capital out there, not just that, you go from like the strategic competitors to private equity to now that kind of hybrid competitor or someone in the space owned by private equity, and now independent sponsors, family offices, search funds. There's just so many different flavors, which is great. I mean, it means that the seller has more options, can find the one that really fits what they're looking for. So very efficient. I saw Kevin Langley on one of your previous interviews, right? And he put it really well. He talked about, the market being more competitive, but also more selective, which is what I was talking about earlier, and that kind of bifurcated. The things that are popular are really popular. The things that are not are really not.
Yeah. Yeah.
And it's tough.
Yeah.
And I think, because he called it, by applying more scrutiny, I think of that. I see that too. There's just heavier diligence. I think getting deals done takes some more work, takes more preparation. Every year there's something we didn't think about before in terms of a business risk. It may be macro, might be micro, and that becomes now a focus of diligence from a buyer's perspective, right? So we got like cybersecurity, then we have AI diligence, then, the whole kind of employment stuff, legal, just goes on with all the things that, need to be checked out that we're trying to guard against as a buyer. So I feel like, for me, the trends are, you have to be prepared for that as a seller, right? So I'm seeing a greater emphasis on, preparation before going to market, essentially sell side diligence. I think that's really important. I think it's a really big opportunity for business owners is to look at their business through the eyes of buyers and, prepare for that, right? Correct where corrections are needed, double down where things are helpful, and be ready for that. And so, that's gone beyond quality of earnings analyses on sell side diligence to, looking at your customer base and your contract base and your legal standing and your management team and your go-to-market strategy and everything, right? I mean, just be ready. It's not rocket science in terms of how a buyer who doesn't know your business as well as you do, how they're going to view it and what they're going to be nervous about. So let's prepare for that.
Yeah, for sure. I think you made a lot of great points there, and from the maturity of our market, for sure, I can see that as well. There are lots of options and lots of flavors. Like I like how you put that, and I think that's going to continue to expand as well. And that's great for everybody, I think. But then, yeah, your points as far as diligence, yeah, I've been hearing that echoed a lot, and sellers need to really understand that it's like you said, it's a process, it's not an event. and getting prepared is becoming more challenging, I think, for everybody, but it's very necessary. I think they're buyers, like you said, and like Kevin mentioned too, and everybody's saying the same thing, is that buyers are really selective. And somebody had, one of my panelists at one of my events earlier this year put it really well. I think he said the risk of being wrong is too high right
Yeah.
now. So
Right.
it's a good way to,
Absolutely.
it's a good perspective,
Yeah.
I think, because it does seem like that too. You cannot miss right now. It will hurt really bad.
Yeah,
So
we've gone from little things you miss that, okay, we can work around that over the next few years, to things over the last couple of years that can kill a business overnight or take half of its profit away overnight.
yeah, yeah, no good if that happens for anybody. Ollie, I appreciate your time always, and these
Thank
are
you.
fantastic insights. I think everybody can make use of for sure. Those of you watching, you can find more episodes of the Dealmaker series on my LinkedIn or on YouTube. Oliver Cohn, thank you, sir.
Thank you.